Ladies and gentlemen, welcome to the Q4 FY24 results conference call of GHCL Ltd, hosted by Emkay Global Financial Services. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentations. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would like to hand the conference over to Mr. Meet Vora from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you. Good evening, everyone. Thank you for joining us on GHCL Q4 and FY24 results conference call. I would like to welcome the management and thank them for giving us this opportunity to host them. We have with us today Mr. R.S. Jalan, Managing Director, and Mr. Raman Chopra, CFO and Executive Director of Finance. Before we begin this call, I would like to point out that some statements made in this call may be forward-looking, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I shall now hand over the call to the management for their opening remarks. Thank you, and over to you, sir.
Thank you, Meet. Thank you. Good evening, everyone, and welcome to GHCL's earnings conference call for the fourth quarter, 31st March 2024. Kindly note that our results and investors presentation has been uploaded on the stock exchanges and the company website. I joined by Raman Chopra, ED and CFO, and Manu Jain from our investor relations and finance. Our results for Q4 24 were in line with our expectation and better on a sequential basis on back of higher volume and lower input cost. This resulted in higher sales and margin. In 2024, our revenue and EBITDA were lower than 2023, but higher than each of our previous 5 years. We grew by 9% CAGR and 6% CAGR over FY 2019 till 2024 for revenue and EBITDA respectively. In India, demand is relatively stronger as compared to the Western world and grew by 2.7%. Demand in end-user segments such as detergent and chemical improved, though solar glass faced challenges from imports. Higher imports from Turkey, US and Russia had resulted in oversupply situation and exercising the pressure on the pricing and margin. However, there is some disruption in the global supply chain due to geopolitical uncertainty and may delay some of the imports. Demand for India is likely to be better next year on account of healthy growth recovery. As a result of this improvement in market sentiment, we will benefit. We will continue to enhance our production cost competitiveness through better efficiency and cost control measures. We are making good progress on our planned growth endeavors. In Greenfield Soda Ash project, we are making progress and expected to obtain final approval soon. Vacuum salt project is progressing as per the plan. We are conceiving a new bromine project at our existing salt works. Our salt improvement project is underway. Sodium bicarbonate increased capacity has headroom for increasing sales and margin. Further in FY24, we have successfully completed installation of 6.7 megawatts of renewable energy, which demonstrate our commitment to strengthen the sustainability efforts. We believe these steps will enhance our growth trajectory and accelerate our profitability in the future. The global demand for soda ash, excluding China, fell by 3.2% year-on-year in calendar year 2023. Demand in US and Europe fell due to high inflation and weak demand. China was an outlier as demand grew strongly by around 10% on year-on-year into calendar year 2023, driven by solar glass and lithium carbonate segment, despite continued weakness in the real estate sector. As a result, global demand, including China, grew by 2.7% year-on-year in calendar year 2023. Globally, there is a capacity addition of around 9 to 10 million metric tons in calendar year 2023 and till now in 2024 combined, driven by 6.5 million via natural soda ash and 2.5 million via synthetic process. As a result, the global soda ash market is oversupplied and sentiment remains weak, putting pressure on realization and margin. Calendar year 2024 is likely to be a dull year, but I believe it should not be worse than calendar year 2023. And growth will be similar of calendar year 2023 at about 2.5%. In calendar year 2025 and 2026, there will be no major capacity addition across the globe. This, along with the global recovery, will rebalance the demand-supply situation. We believe that the Indian market may remain range-bound with an option for upside as and when scenario improves. Now I will hand over to Raman, who will provide further detail on our financial performance. Following that, I look forward to addressing your questions you have any. Thank you.
Thank you, sir. Good evening, everyone, and a very warm welcome to our Q4 and the year-ended 31st March 2024 earnings call. The performance for the current quarter came in at lower than Q4 of the last year. However, some recovery has been observed from Q3 of this year. Revenue for the quarter came in at 840 crore compared to 1140 crore in the corresponding quarter of the last year, and rupees 813 crore compared to Q3 of this year. The reason for this lower revenue is mainly due to increased imports from Turkey, USA and Russia, thus putting a pressure on the realization. In Q4, volumes increased from Q3, which resulted in higher revenue. EBITDA for the quarter stood at 201 crore compared to 371 crore in Q4 of FY23 and 165 crore in Q3 of the current year. For the quarter, EBITDA margin came at 23.9% compared to 32.5% in the corresponding quarter of last year and 20.3% in Q3 of current year. Sequentially, improvement in margin is mainly on account of increased sales volume and reduction in input costs. PAT from continued operations stood at 124 crore compared to 251 crore in Q4 of FY23 and rupees 100 crore in Q3 of this year. For the year ended 31st March 24, we generated 662 crore in cash profit after tax, which was utilized towards payment of capex of 107 crore and loan repayment of 152 crore and dividend of 166 crore. Also, working capital got reduced by 157 crore, mainly due to reduction in input costs. This, in overall basis, resulted in an overall cash surplus of around 400 crore for the current year. We are a net debt-free company and our gross debt stood at 197 crore with cash and cash equivalent of rupees 898 crore rupees, resulting in a net cash surplus of around 701 crore at the year end. Board has recommended a dividend of rupees 12 per equity share of rupees 10 each, which is 120% of the paid capital and 20% of our net profit. With this, I conclude my comment and would now request the moderator to open the forum for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gaurav from Capital Farming Consultants. Please go ahead.
Yeah, hi. Thanks for taking my question. I hope I am audible.
Yes, sir.
Yeah. I have two questions to the management. The first question is regarding the expansion which has been announced.
Sorry, Gaurav, if you can speak a little louder because we are not being able to hear you properly.
Is it audible now? Better?
Now better.
Thanks a lot for confirmation. So my first question is, considering that the market is already struggling with oversupply and subdued realizations, right? So our proposed expansion of 5.5 lakh ton per annum, which will cost us approximately 4,000 crore rupees, how is it justified considering the oversupply and the subdued realization? That is my first question.
Right. So Gaurav, if you look at, if you want me to answer this or you want to ask all the questions together?
Yeah. You can answer this first, please. Thanks.
Yeah. So basically, Gaurav, this short-term situation which you are seeing, an oversupply situation, is not likely to continue. Second, in India, if you look at today also, there is approximately around 25-26% of the product which is coming from outside the world. The pricing could be a challenge, but every producer has been able to sell the product into the domestic market. And longer, if you look at slightly medium term, maybe 3 to 5 years from now, every year you need another 200,000 tons of the extra volume demand growth happening in India itself. If you take that into account, there is a kind of the projection which we have is the demand which is around 4.3 million tons, which is likely to be around 7 million tons in the next 5 to 7 years of time. So there is a kind of a demand growth of around 3 million tons from here, right? And this 500,000 tons will get absorbed without any difficulty.
Yeah. Thanks a lot for that clarification. So related to this only, on the capital allocation, like we are saying that 5.5 lakh ton, it will cost us 4,000 crore rupees. And if I'm not wrong, our current capacity
stands. You, sir. May I request you to use the handset, please?
I'm using the handset only. Is it audible now? Is it better?
Yeah, it's better. Sometimes it's going, we are not being able to hear you, Gaurav. So if you can, yeah, please go ahead.
Is it better? Is it better now?
Yeah, better now.
Sir.
Yeah, thanks. So what I was saying that considering 5 lakh ton, we are going to spend almost 4,000 crore rupees, and considering, if I'm not wrong, our current capacity is 12 lakh ton per annum, right? So almost our replacement cost of setup turns out to be somewhere around 8,000 crore rupees, whereas market is valuing our company less than 5,000 crore rupees. So from capital allocation point of view, does it make sense that rather than going and spending money as of now, we should go and do the buyback so that the internal rate of return of the money, because when you are taking up the project, I'm sure that you are evaluating the internal rate of return, that how much that is going to give you as a company. So if you correlate that with the buyback, isn't it that at such cheap valuation, you can go for the buyback of the existing shares, and then the free cash flow is there, maybe in 1 year, 2 years down the line, then we can continue with the planned project? That is my second question in the last. Thanks a lot.
Yeah, Gaurav, let me respond to this. You see, basically the capital allocation, the way we look at the capital allocation is from a slightly longer term perspective. Okay, in terms of the market capitalization which you are talking about, is a kind of a phenomena which depends on the meaning of the other things as well, current market situation and so on. So therefore, from keeping that into mind, the growth of the company is also very, very important, because ultimately the growth it gives to the shareholders' valuation. So as a management, we always believe the right allocation of the resources in the growth and the reward to the shareholders has to be kind of a looked at. And like you know that we are in this business for the last 35 years. Still, in this business, the return on capital employed is more than 25-26%. And even the projection which we are having for the greenfield project, our IRR is coming more than 16%. Okay. So keeping everything into mind, we should not get our thoughts modified every now and then because of the market situation gets changed of every now and then. We have to always look at slightly from a longer term perspective. So our belief is a combination of a reward to the shareholders, either in form of dividend or the buyback, or on the other side, the growth of the company. Like you know that in addition to the soda ash expansion of 500,000 tons, we are also looking at the bicarb, your bromine, vacuum salt, and so on. So those growth is also, as a management, we believe that the growth is also equally important. And you know that in the last couple of years we have grown from 7 lakh tons to now 12 lakh tons. And we would like to continue with this journey of the growth of the world, because ultimately we have to become a kind of a relevant player into the soda ash business when the demand growth kicks in.
Sure, thanks. And just to follow up in this, if you don't mind, how we are going to fund this? Is it going to be debt to equity ratio of 80-20, 50-50? What exactly is going to be ratio for this expansion?
Very right. The thing you see, basically, as you know, that today also we are on the balance sheet of around 900 crores. And by the time this project gets completed, another 3 years is there, and almost the bottom line at this, even in this market situation, we have something around 500 crores of net cash after paying the dividend and everything. So very comfortably, we will be having a very, what you call, balanced debt equity ratio. Right now, we have a negative debt equity ratio, but I think our peak is coming even less than 1. It's coming 0.5 if my numbers are. It is not going to be more than 0.5. And funding, as you rightly said, will not be more than maximum to maximum is going to be something around 2,000 crores, maximum to maximum.
Thanks a lot. I will come back in queue. Thanks.
Thanks.
Thank you. The next question is from the line of Jainam Ghilani from Swan Investment. Please go ahead.
Good evening, sir, and thank you for the opportunity. Am I audible?
Yeah, please.
So, just wanted to understand now, as you indicated that the pricing in the domestic market is getting impacted by a higher import coming for Turkey. But can you throw some light in terms of the demand? Because as you indicated in your earlier in the opening remarks that solar glass demand has been seeing a little bit of pressure. So for 24, 25, 25, 26, how shall one look at the overall demand in the domestic market?
See, as you rightly said, a couple of things. Let me first clarify before I answer your question directly. First and foremost, Turkey supply which you are getting into the Indian market is a temporary phenomenon. For them, the natural market is the Europe market. The moment the Europe recovers, all the volume or majority of the volume of Turkey will go to that market. Because ultimately in this business, the most important thing, where do you supply because of the supply chain cost? So that's one. Second, now coming back what you rightly said about the solar glass investment. As you know, there are many large players in India had announced massive solar investment or the green hydrogen investment into India. And there, the solar investment becomes very, very important for green hydrogen. And these are getting now scaled up. Yes, some imports are coming right now for the government. Since they have kind of a mandate of growing the carbon footprint reduction, and therefore they are allowing the solar glass import. But subsequently, when the capacity gets built into India of the solar glass, automatically that incentive for the import will get reduced, and therefore the demand will get recovered onto the solar glass as well. So on one side, the huge amount of opportunity on the solar glass. Second, even the import of solar glass will also get tapered down once the capacity gets built into India. So we see clearly a kind of a path for good growth into the solar glass.
So appreciate that this will be there from the medium to longer term perspective. But if you are looking from the near term, in last quarter we did see a good volume growth for GHCL. But do we continue to see the same volume numbers for FY25, or probably there could be some pressure on that as well?
As I mentioned in my opening remark, the demand growth in 2023-24 was 2.7%. The way we look at it, of course, you know that in the current geopolitical situation and the overall uncertainty across the globe, something with a clarity speaking about is very, very difficult. We definitely see that next year, 24-25, the demand growth will be better as compared to 23-24. So therefore, we definitely see in detergent, in chemical, and other consuming sectors, we see a kind of a slightly better demand growth in India in 24-25.
And so secondly, now since you indicated the global industry oversupply, and given the current prices, definitely there won't be a majority of the company will be obtaining at a good level of profitability. So are we seeing any rationalization of the capacity in the industry?
Sorry, I've not understood. What you said?
Sir, given the current pressure in the overall margins of the soda ash business for the domestic as well as the global company, are we seeing any rationalization of the capacity in the industry?
I don't think at this point of the time. See, even this margin, we are comparing our performance as compared to 22-23. And like I said in my opening remark also, if you look at our same performance after eliminating the 22-23, because that was an abnormal year, margins are still very healthy. So keeping that margin which we are talking about, even 23-24% at this point of the time, is a very healthy margin on this. So therefore, I don't see any rationalization at this point of the time in the business, either in domestic or in the global space.
So, then the last question from my side is on the capex that the board has approved, and board has also shown an interest in setting up a bromine project also. So, if you look from a near-term 3 to 4 year perspective, what is the total capex that GHCL will be spending if you consider a greenfield project, your vacuum salt and the bromine one?
See, if you look at the investment into the bromine project, is a very hardly around 120 crore kind of a thing. And in vacuum salt is roughly around 150 to 170 crores, right? So put together both, we are talking about 300. So the major investment which is coming into the greenfield project, which is around 4,000 crores. And that also will be happening in next 3 years of time, whether it will be the more major expenditure will happen in the rear end of the project completion. So this is like 4,300 crores of investment will be there, which will incur in next 3 years of time.
And for this greenfield, we have already acquired a land, right?
Yeah, we have got a major portion of the land has already been acquired. A lot of work has been done. Basic engineering has been completed. Detailed engineering is working. Environmental clearances on the last leg of that. So we are very close to kind of a situation where we have to just start kind of in next few months so that the physical activity should start.
Sure, sir. That's all from my side. Thank you and all the best.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking Limited. Please go ahead.
Yeah, thanks for the opportunity and congrats on. The question is, during FY24, what has been the volume growth throughout the year? And given that we had a couple of setbacks because of the operational challenges, and next year, beyond the soda ash volume growth, will there be any additional revenues coming from the new projects? Thank you.
Yeah, Rohit, as you rightly said, in terms of our overall volume production, because of the some of the technical issues which we had last year, our volume was slightly lower than the earlier period. Okay, but that is now settled, and therefore this year the production volume will be better than last year. So that's sure. And the second, I said, if the demand projection which we are talking about, definitely the sales numbers should also be slightly better as compared to the last year.
Sure. And any other revenue streams from the newer projects which will likely to contribute in FY25, or those will predominantly from FY26?
See, one is the sodium bicarbonate, as I mentioned, so that capacity expansion had happened last year. Now we are seeing a kind of a demand growth in the sodium bicarbonate. So the volume growth in the sodium bicarbonate will also be good in this year, 24-25. So that will also add to the revenue. And in addition to that, like I said, our efficiency, our cost control measures, there are many things which we are doing, which will add to the bottom line.
Sure. The second question is in terms of Chinese demand, where the growth was almost 10%, as you mentioned last year. So, is it a total consumption-led growth, or probably there is some inventory of even solar glass in the global system, and that may have some repercussions during the course of 2024 in terms of the soda ash additional demand? Thank you.
See, the last year, the demand growth in China was primarily because of the very high growth into the solar solar and the lithium carbonate. And they were the net importer, as I mentioned in the opening. They were the net importer last year. Probably at this point of the time, projecting what will happen because of the global situation is very difficult at this point. But I've just given you an update of last year. And second, the real estate, which was lagging in the last year, how does that shape up next year? That is also to be seen. So let's hope the journey of China continues the way they have done in the last year.
Sure, sir. Thanks for answering all the questions and all the best. Thank you.
Thank you. The next question is from the line of Riya Mehta from Equitas Investments. Please go ahead.
Thank you for giving me the opportunity. In terms of volume for Q4, we mentioned that it is higher than Q3, but in terms of realization per ton and EBITDA per ton, was that also higher than Q3, or are we seeing some flat?
See, in terms of the volume, it was marginally up as compared to the last quarter. Almost, I would say that I would say in the same range now, not much significant volume growth was something around 5%. The volume growth was around 5%. And in terms of the realization, yes, the realization was lower as compared to the last quarter of last quarter means Q3 of 24. It was lower, and EBITDA was slightly better because of the better cost control.
Got it. Also, in terms of demand supply scenario, so globally, you said that we have seen a global demand decline of 2.3%. That would be majorly coming from Europe?
See, overall, as I said, if you look at excluding China, the demand, the degrowth was around 3.2%. And that is primarily the demand, the degrowth into the Europe as well as in US.
Okay. And we have seen a natural soda ash capacity in US also being commissioned last year. So how is the ramping up happening there?
So that has already come in line, and currently those expansion is fully under utilization. So like I said in my opening remark, that in last 18 months, I think around 9 to 10 million tons of the new capacity has been built. And let me also tell you one thing, that every year, even if we go with the 3% of demand growth globally, you require almost around 2 million tons of the extra demand every year. So this, like I said, in 25, 26 and 26, 27, we don't see any global new capacity coming in. This will get absorbed in the supply chain of the demand supply rebalance will happen in the after 1 year. This is what the way we look at.
Got it. In terms of Inner Mongolia plant, the phase 2 has also commissioned?
Yeah. This phase 2, no. Phase 2 will come, I think phase 1 fully completed, and phase 2 most likely will come after 2 years of time.
Okay. Phase 1 was 250,000 tons, right?
Sorry?
Phase 1 was 250,000 tons, right?
No. Inner Mongolia was more than 5 million tons.
More than 5 million.
Phase 1.
Phase 1. And over there, how are we seeing net imports? Are there a lot of shutdowns of plants that has happened?
You are talking about China?
Yes.
Yeah, China. Some of the plant was under shutdown because of some of the operating issue or the environmental issue. Yes, there was some shutdown there.
Are you also seeing some shutdowns in Europe and US?
Very difficult at this point of the time. We have to project on those things. So let's shape up. Let the things be a little bit clear. Then probably we will be able to tell you better.
Also, Tata Chemical just commissioned its capacity, and going forward, also they have mentioned about the brownfield expansion. So that will come prior to our expansion. So will we see some kind of volume impact?
No, like I said, overall demand in the India will grow as per our projections by around 5%, and that itself will require another 200,000 tons of extra volume. And because of the demand supply, the supply disruptions because of the Red Sea, probably we don't see that kind of a challenge in the coming quarters.
Okay. And in terms of our full capacity utilization, how much more can we do as compared to the volumes done in Q4?
Yeah, I think we are on the full capacity utilization at this point of time.
Okay. So Q4 will be the highest possible volume we can do. Right?
Yes. Yes.
Okay. And in terms of raw materials, how are we seeing the power costs over a period of time? We think power costs being reduced. So how is it for us?
Ultimately, we will also be led by the overall globally the prices pattern. Currently, I think prices are more or less stable into the energy prices. So I think at least at this point of the time, of course, you know that because of the global uncertainty, it's very difficult to predict what will happen. But currently, we are seeing a stability in the energy prices.
Okay. So there is no decrease in prices as such.
Yeah.
Hello?
Yeah.
Also, our capacity, greenfield capacity, where are we in the approval stage?
Sorry?
Where are we in the approval stage? Like, where is it pending?
I think I've already said, Riya, in my earlier medicine, that we are in the very last leg of our approval.
Okay. How much time, if you could help us estimate?
Very difficult, Riya. We cannot predict the timeline.
Okay. It is at MOEF level?
Sorry to interrupt you, miss. I request you to come back
Sure,
for the follow-up question.
Sure. Thank you.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to 2 per participant. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you, Mr. Jalan. Thank you, Raman. So if you look at the current global supply situation, if you are saying that the new capacities are operating at full capacity, there is still, I think, the bulk of the industry capacity is possibly operating only 80%. So the question is, do you see material reduction in capacity or reduction in capacity utilization, particularly in Europe, where they are facing a lot of pain? And when do you see that happen? And what is your sense of the current cash cost for the new Tona-based natural soda ash and the new capacities based on synthetic, solvay route? Any sense you can give on these two?
Yeah, Mr. Miss, I think very pertinent questions. But at this point of the time, our understanding is, like I said, very difficult to predict that any change or the rationalization into the European capacity will happen and when it will happen. On a logical basis, what you are saying is right, but when it will happen, we don't know right now. In terms of the China, I would say where the major expansion has happened, there I think they are balancing themselves into their supply-demand situation. And we are not seeing, at least at this point of the time, a major disruptions happening from China to the other part of the world. So that's the way we look at the China at this point of the time. So far as your question on the cash cost, as you know that the natural soda ash is much cheaper in terms of the cash cost. However, because of the supply chain cost from a location of a production to the port and from port to the consumption centers, I think significant amount of expenses get away from there. And so therefore, in terms of the cost competitiveness, the people who are closer to the location where their consumption is, definitely they are competitive in the competitive landscape. Therefore, I don't see any major worry on those accounts for the new capacity to kind of justify for expansions or coming into the field. And India, particularly as I said, India is in a sweet spot. Because you know that globally, India is a few countries where the growth of the overall GDP growth or overall consumption growth are likely to be good. And therefore, we could clearly see that the opportunity of an investment into Indian space in soda ash.
So if you see the outlook for, say, over the next 4 to 8 quarters, so when do you see the industry getting back its, pricing power and some improvement in percent margins, given the, the balance between the cost structure and the demand and supply and the pressure from Turkish import? You take everything into consideration. When do you expect some kind of recovery in the outlook for the industry pricing power and margin on a sustainable basis?
See, Mr. Ramesh, two things I just wanted to highlight here. You see, at this point of the time, and I think you will agree with me, such an uncertain environment, probably we have not seen this kind of uncertain environment any time in the near future. Okay, so much of uncertainty, Red Sea, your geopolitical tension in the various countries, and the energy moving up and down. So predicting any kind of a situation at this point of the time is very difficult at this point. So what we are focusing more on, slightly longer term situation, number one, and number two, we are seeing the sweet spot that we have. So like one of the things which we are doing in GHCL is, how do we become more competitive? How do we focus on our costs so that we become more competitive than what we were yesterday? Secondly, what are the sweet spots into the small investment, like I just said, bromine? Now, in the existing salt field, we are going with a technology where we will be able to kind of create a kind of a product out of our existing salt field. Similarly, the vacuum salt, generating from the waste energy, producing the vacuum salt. So these kinds of initiatives, how to improve our productivity on production of soda ash, or including the cost, like as I mentioned, to our captive salt production enhancement on that, or even the opportunity of a sodium bicarbonate. So these are the initiatives which we are doing, Mr. Ramesh, to kind of remain ahead of the curve into the business. What will happen in the next few quarters? Very difficult at this point of the time. I can tell you what has happened. Based on that, probably I think we have to leave it on that time.
Understood. Just one last thought, if I can get your perspective.
Sorry to interrupt you, Ramesh.
Just one last thought. This is very important. This is very important. Just on the lithium carbonate and solar panels, there is a view that there is a certain amount of front-ending of the capacities, and that is also squeezing demand for soda ash. So what is your reading in terms of the incremental mapping of consumption in these two segments? Are you really seeing on the ground consumption growth in lithium carbonate and the solar glass panels, and the excess capacity build up there is not an issue right now?
You see, as you rightly said, so far as the lithium carbonate is concerned, in lithium carbonate definitely the front end has happened, and therefore the lithium carbonate prices are softened. But again, like I said, Mr. Ramesh, if you look at, we have to look at everything on a slightly longer term perspective. We definitely see that the future of the lithium carbonate will continue to be robust, and maybe the demand supply misbalance or will happen for a short period of time. But we are positive on that segment as well. So far as the solar is concerned, we are very positive on the solar side, because in India as well as globally, because as you know that the carbon footprint and the kind of a focus of the globe is there. So we clearly see this is the sunrise industry, and definitely that will lead a significant amount of growth into the soda ash consumption in this segment, which is a kind of a very small at this point of a time.
Thank you very much, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question, sir. Some of my questions are already answered. So few from my side is, as we have commissioned our sodium bicarb capacity last year, so how is the there, and where we can expect, the kind of full peak utilization in that. And secondly, since we have announced this bromine investment, So what sort of revenue we would be expecting, what kind of margin we would be expecting, and when we should expect the final commissioning of this project?
See, Rohit, first question, what you said about the sodium bicarbonate. The good news is that there is a kind of a usage of the sodium bicarbonate with the flue gas treatment has been started. I think many of the projects had started using the sodium bicarbonate. And therefore, the good news is that you will see in 24-25 the demand expansion happening into the sodium bicarbonate. And probably 24-25 we will have a significant amount of growth into our utilization of 24-25. And hopefully the full utilization, and probably maybe we will be looking at a few more expansion into the sodium bicarbonate in next year probably. So that's a sodium bicarbonate situation. Now let's come to the, you said about the bromine project. We have just in last few months, we have kind of received, of course, the preparation work was going on in this. And just to kind of give you, like I said, approximately the investment is around 120 crores, and we will be producing something around 2,800 tons. And our IRR will be roughly around in the around 18 to 20% kind of IRR will be there, and probably this will be because India's bromine growth is something around 6 to 8%, and we hope that and even China has a large importer of bromine. So there is a good growth globally. Also, if you look at globally, you will find that globally the demand of bromine is something around $3.5 billion demand is there. The growth is something around 6% globally, led by China. And so therefore, in a way, I would say that 2,800 tons, approximately the price realization is 250,000 rupees, around 63 crore. 63 crore rupees kind of a top line will be there on this. And IRR and I think
okay. Yeah. Thank you, sir. And once all these plant commission, sodium bicarbonate and our bromine are also coming, I mean, how diversified our revenue which should be looking at? I mean, currently I think more than 90% is still our soda ash. So anything there we can see a more contribution from other segments with the better margins?
See, first and foremost, Rohit, I think in the soda ash itself is a very good margin, and we have a kind of a expertise on that business, as you know, that in terms of cost competitiveness, in terms of our efficiency, the way we do the business of soda ash, I think we are in a much better position on that business, and we continue to our focus on that. Yes, but as you rightly said, product market expansion is required, and we have seen that journey in last few years. We are gradually expanding our product base. So at this point of time, we have added to the sodium bicarbonate. We have doubled the capacity. We have a plan to kind of go beyond in that double the capacity. We have added the vacuum salt. Now we are adding the sodium bromine also, and we are also looking at some more products into that basket. So we will keep on growing our basket of the product. Even our focus on the expanding on the bromine side also, we are exploring that possibility also. So we'll keep on doing that growth, but it will take some time to kind of create a kind of a fair amount of product basket expansion where 90%.
Okay. So this bromine is largely for domestic or export?
No, we have both opportunities, Rohit. On one side, we have an opportunity on the domestic market. As I said, domestic market is also quite large, and the demand growth is happening something around 6 to 8% in the domestic market. And on the other side, even China is the largest importer of bromine. So we have that opportunity also.
Okay. That's it from my side. Thank you. Just okay.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your questions to 2 per participant. Next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar, sir, and thank you for this opportunity. Firstly, sir, when we are emphasizing better utilization and contribution from sodium bicarbonate, it is directly proportional to the realizations for soda ash moving up. That is higher. Our margins for soda ash on a combined basis will improve since greater usage of sodium bicarbonate. That is what the understanding, because the raw material for sodium bicarbonate is soda ash itself.
Yes, Saketji, definitely the volume growth into the sodium bicarbonate will definitely improve the overall margin of soda ash. Yes, you are right.
Right. And sir, one more clarification on the bromine part. You mentioned the peak turnover will be 60 to 63 crore on a 2,800 tons capacity. Okay, and then in that realm of things, that is a very small project. That is we are trying something on it, and this is only a baby step in that direction.
No, right, Saketji, you said ultimately what we have to do is kind of build up this over a period of time, the new, and this all we are getting out of the, in a way you can say it is creating a value out of the nowhere. Because we are already producing the salt from those coal fields, and just by putting a small amount of money, we are creating almost around a business of something around 60 to 70 crores revenue for that. I think these kind of initiatives where the return on capital is very, very good. So our focus is to look at these kind of opportunities, like the vacuum salt I just reached in the earlier calls also, that we are doing this model where the entire energy is a waste energy. Keeping that into mind, I think this is the way we are going.
Right. And one small point on the salt yield program, the benefits of salt yield program will be accrued for the financial year 24-25?
No, it started happening. Like last year also we got some improvement. This year we will get another improvement on that, and this will be a journey, like I said in the past also, 3-4 years of time. Gradually things are happening, and this benefit will accrue over a period of time.
I have one question for Ramanji. Sir, we have seen the other expenses for Q1Q moving up significantly from 128 crore to 145 crore. So is there any one-off item in it, or if you could explain? And then, sir, you did mention that dividend payout has been 20% of net profit. So earlier we have stick to the band of 15%. On a consistent basis. So can investors now penciling in a 20% payout, or due to the lower profit for this year, the management has kept to rewarding its investors, and it is only one of 20% payout?
So first of all, I'll give you another brief on other expenses. Yeah, the other expenses are higher because of the higher freight cost during the higher freight expenses, because the volumes have gone up. So around 12 crores on account of that, and rest is on account of the CSR expenses. So this is a broad breakup of increase in the cost, and there has been some increase in the donation also during the quarter. So these are the three things which are there.
Okay. So what should be the numbers that we will be penciling in for on a quarter basis if we remove the one-off?
So it's largely because of the operational freight is higher by almost 13 crore rupees compared to the previous quarter.
Right. What Raman is trying to say, that the volume as well as the material moving closer to the customer, this cost has been there, which probably will not be get kind of repeated every year. Of course, if the volume goes up, then definitely this cost will go up. Otherwise, no.
Right. And on the dividend part?
The dividend part is a part of depending upon how the board takes the view of the growth opportunities or the way the overall profitability happens. But as you know that over a period of time we have demonstrated our reward to the shareholders by buyback we have already done in the past, and we'll continue to have that kind of allocation for the shareholders depending upon how the situation pan out at that period of time.
Right, sir. And to conclude, sir, on the EBITDA percent part, the EBITDA margin of 25%, closer to 25%, is a sustainable number for this year, taking into account the improved number from sodium bicarbonate, the advantage of the salt yield program, the lower input cost, all these factors will cumulatively add to the margin. I'm just making my conclusion mark here. No question, ma'am, just a conclusion so that sir can just revert.
That is very difficult at this point of the time to give a guidance on any percentage and things like that. I have given you kind of an overall how do we see the business, and as I said, these are I would not call it, these are assessments at this point of the time. How the scenario shape up in next few quarters, probably because there's very lot of uncertainty into the market, it will be very difficult to kind of speak about any numbers.
Yeah, right, and all the best, sir. Thank you. I joined it.
Thank you. The next question is from the line of Sangeeta Purushottam from Cogito. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. So my question related to the global supply-demand situation that you have put on one of your on your slides, which is page number 13. Now, there basically we're seeing the global capacity of 80 million metric tons, and production at 66, which means there's still a fairly large gap, right? With operating at globally 80% capacity. Now, even if the global demand grows by, say, 2 to 3 million tons, would that capacity not be enough to just take care of the demand for the next, say, 4 years at least? And therefore, is it likely that the prices may remain under pressure for longer than we think, or may not rise very much?
You see, as you have seen that the major demand, the expansion of the capacity which is happening in China.
Right.
What our understanding is in a slightly longer term time, this rebalancing of the capacity in China will happen. Because there are many plants in China which are likely to be kind of having a headwind on because of their location, because of the cost competitiveness and things like that.
Right.
Like I said at the beginning of my comment, that these 25, 26 and 26, 27, this rebalance will happen.
Okay. Right.
And second, in terms of the capacity, probably like you said, at this point of the time is 80%, probably that can go to around 90%, but things will not be very significantly different than what it was in 23-24 or likely to be in 24-25.
Right. Right. So, sir, would it be fair to say that, prices may have bottomed out now because the impact of the new capacities has been felt, but it is difficult to predict when they will start rising? It could be 12 months from now, it could be 18 or 24 also.
Again, predicting what will happen in the future will be very difficult to kind of predict. But I can only tell you that based on the current assessment that we have, I think prices are on the territory of the bottom out. This should be in the range bound kind of a situation on this pricing. This is what we look at this point of a time. How it will happen after 2 months, we don't know right now.
Right. Okay. So Andre has one more question.
Andre here, Sangeeta's partner. Just a follow-up question to what Sangeeta was saying. We've been talking to a lot of companies about what the demand situation across a whole category of goods is in Europe, and no one seems to be seeing a trend for some higher demand. So if Europe is going to remain slow, will this phenomenon of Turkish companies dumping soda ash in the market continue to affect our realizations? So it's possible that there may be some demand growth in India, but the realization of soda ash would remain poor because of the weak demand in Europe linked to Turkey and all dumping.
See, as I said in my earlier answer also, that predicting how the shape up of Europe will happen, how the domestic industry of the Europe will shape up, they will be sustainable on the current demand supply situation, will they be cost competitive on those costs, and if the demand of the Europe does not recover? These are the questions which needs to be answered, and we don't know right now at this point of the time. But one thing is we reasonably kind of believe that a kind of a regionalization of the demand-supply situation definitely will happen. Like China, in spite of such a huge demand growth of the supply, they balance themselves into their demand-supply situation. Same way, the same thing should happen in the Europe also. So, at this point of time, I can only say that we see that 2024-25 probably will be in the similar range-bound situation. How that will step up in 25-26, we don't know right now.
Okay, my only comment was कि यूरोप में कुछ रिवाइवल के लक्षण नहीं दिख रहे कहीं भी.
मैं मानता हूँ आपकी बात कि रिवाइवल के लक्षण अभी नहीं दिख रहे हैं, बट जब इतनी बड़ी डिमांड का स्लो डाउन हुआ तो वो भी प्रोजेक्ट हमने नहीं किया था, क्योंकि इतनी बड़ी डिमांड का डिग्रोथ हो जाएगा. किसी ने सोचा नहीं था कि चाइना में इतनी बड़ी डिमांड की ग्रोथ हो जाएगी. So these are uncertainties to have at this point of time. To predict on those uncertainties will be very difficult. But like I said, I'm repeating it that if you look at slightly longer term situation, we are very confident in this business that the way the demand of the solar or the lithium and the other consumptions probably demand supply balance will happen, and it's nothing to worry on that side.
Okay. Thank you very much, sir.
Thank you. The next question is from the line of Shubh Shah from Ratnatraya Capital. Please go ahead.
Hello.
Yeah, go ahead.
I have broadly three questions. We can go one by one. So first is on the greenfield capacity. Roughly, is there a time from which we can think that the volumes from this capacity will start coming in? Maybe 2 years, 5 years, anything like that?
No, I think the projection at this point of the time is likely to take around 3 years of time from now onward to complete this kind of a massive project. So that's a timeline we have in our mind.
Yes. So given,
as you know, we have announced that 500,000 tons of the capacity.
So given 3 years for this to kick in, and we are already at high utilization, usually around 90%, do you think we might lose some market share?
You see, as you rightly said, at this point of a time, we have the highest capacity utilization. Probably some volume growth will happen in 24-25 because last year we had lost some volume because of our technical issues, which we will gain this year. And on the other side, we are expanding on the other products. But yes, in terms of the soda ash, probably we may not have kind of a new volume coming in next 2 years of time. Of course, 24-25 it will be, but 25-26, 26-27 probably we may not have that volume.
Understood, sir. And the next question is, what would be our split in terms of dense and light soda ash? And the reason I ask this is solar glass would be mostly dense or soda ash. So how do we think about that?
No, we are definitely very clear about the demand growth which is likely to happen into the dense more than the light soda ash. Of course, in the light soda ash also in the Indian typical situation, the detergent demand will grow. But as you rightly said, dense production will be high. We have currently full capacity, almost around 60% of the volume can be generated out for the dense. And in the new location also, we are going on the same ratios. And probably we will not have any difficulty because of light and dense combination.
All right, sir. And my last question is on if you have any outlook on realization going forward for the next 6 months or a couple of years.
Very difficult at this point of a time to talk about any prediction about the realization. But as I said, range bound of the bottom out of the prices at this point of the time, and should be in the at least near term we see a range bound of the realization at this point of the time. But yes, if any opportunity comes, then definitely there is a possibility of upside into the margin.
Sorry, I just missed a point on the capex front. Out of the 4,000 crores, how much have you spent?
No, we have very meager amount we have only spent, which is only on on the land acquisitions and things like that. Slightly expenditure will start once we start the physical activity of the project. So maybe some amount will spend during 24-25, and the major portion will be happening after that.
Understood. That's all from my side. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, the management will take only one question per participant. The next question is from the line of Rohit Nagraj from Centrum Broking Limited. Please go ahead.
Yeah, thanks for the follow-up. So just two quick follow-ups. One is the capex for FY25 and 26, excluding the greenfield capex. And second, given that the market is oversupplied, in your assessment, is there any inventory situation across the globe which is on a higher side? Thank you.
So last question, this inventory built up at this point of the time, not a very significant inventory built up into the system because of the China is on a low inventory situation. And the first question, frankly speaking, I have not understood what your question is about that.
So barring the greenfield capex, what will be the capex for our expansion, the regular expansion plans during FY25 and 26, the maintenance plus smaller expansion plans?
As I said, overall it is about 25, basically two projects, which is a sodium bicarbonate, your vacuum salt in bromine, and some small amount on the regular side. Next year also 25, 26, other than the greenfield project, completion of vacuum salt and bromine and some other expenditure. This will be in the range of around 250 crore kind of a situation every year kind of a situation.
Sure, sir. That's all. Thank you so much.
Thank you. The next follow-up question is from the line of Gaurav from Capital Farming Consultants. Please go ahead.
Thanks for this follow-up question. The follow-up question is that, like, we have announced the capacity expansion. So, any other player in Indian geography specifically who has announced capacity expansion in the next 2, 3 years or 4 years down the line?
Gaurav, sorry again, I'm not been able to understand your question clearly. So, if you can slightly louder.
Is it audible now?
CapEx in the next. Sorry, my colleague has told me. Any person announced the capacity? Yes, like you know that some of our competition has announced those capacities, and I have given you kind of a scenario of the way we look at the growth into the India. So definitely there is a room for all of us to kind of grow our business.
Thanks for clarification. My last follow-up question is on the capacity utilization. Sorry, I missed out if you have earlier clarified.
Sorry,
what was our capacity?
I request you to come back for a follow-up question.
It is related.
The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead. Hello? Sir, we are unable to hear you. Hello? Due to no response, we are disconnecting their line. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Follow-up question from my side is on the utilization levels of the company for the year and the import number for the country for the whole year. If you could give these two data points.
See, this year in 23-24, the total import was around 1 million ton, and the utilization was, I think, almost at peak level. Slightly in the first 2 quarters, slightly it was low, but overall it was on the peak level in the last quarter.
The average utilization number you can give, sir, for the years, you are contemplating 5% volume growth. So is it okay that 95 will be the number and we are aiming for a 100% utilization level for the next year? That translates into 5% volume growth?
I think I've given you the indication of that the full utilization will be at this point of time. In the first 2 quarters, we had some setbacks because of the technical issues. And next year, probably we will have that number, which will be better than this year. Number will be there. I think you can always calculate this number. You have all the data.
Right. Thank you, sir, and all the best.
Thank you. The next follow-up question is from the line of Riya Mehta from Equitas Investment. Please go ahead.
Thank you for the follow-up question. Just in the balance sheet, your intangible asset has gone up by 20 crores. So what would that be?
That is during the year we acquired Ajmera Cement. So there's a lease reserves, lease mine reserves are there of the lignite there. So that is classified as an intangible asset. Limestone, sir.
We have acquired one business for the captive limestone, and that is just including that account.
And what was the total payment done to them?
I think the total payment was
around 27 crores.
27. Okay, thank you.
Thank you. The next follow-up question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead. Hello? Hello, sir. We are unable to hear your voice.
Hello, can you hear me now?
Yes, sir. Please go ahead.
Yeah. Sorry, I was on mute. So if you look at this captive limestone, for the expansion, what is your target in terms of the internal production of limestone and in-house production of salt? What would that percentage be?
Mr. Ramesh, at this point of time, we are looking at the salt field what we have. We are using some 800,000 pairs there. We are definitely trying to enhance our capacity there. In addition to that, we are also looking at a possibility, or not possibility, I would say, we are trying to get some more captive salt acquisition or some government leads on the salt field. And hopefully, the way we are planning, probably we will be able to take care of the requirement of the new greenfield as well as the current requirement of our plant. Probably will be in a much better position as compared to what we are today in terms of overall salt requirement because of this initiative which we are doing. And in terms of the limestone, that limestone, as you know, that the major portion of the limestone in India by all across the industries are being imported, and there we are kind of distributing that limestone supply from a different geographical location, and largely we will be more dependent on the import of limestone, even in the greenfield project. Yes, some percentage will come from the domestic as well.
Now, when you say domestic, I'm asking about the company. Will the company be able to increase the production or share of captive production of limestone and salt? So when you say imports, you're talking about import from outside India, right?
Yeah. So, Mr. Ramesh, like I said, captive production we will not be able to increase in a very significant manner in the limestone. But yes, in the salt, as I mentioned to you, we are doing some initiative on that area, and probably there we will be able to increase the salt production captive.
Okay, thank you very much, and wish you all the best.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. And I'll hand the conference over to management for closing comments.
Yeah, thank you everyone for your all support which you have been given to us. And as I always mentioned, that we will always do best of our ability to kind of grow the business, remain competitive in the business, and do everything possible to kind of create value for our shareholders. And we will also be very vigilant on our capital allocation to ensure that the capitals are being properly utilized for the value creation of our shareholders. So thank you for all your support.
On behalf of MK Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.